Tesla. They blew away earnings again. That's it. Show over. Now, actually, they hit their first full year of profitability. They're now on the path to being added to the S&P 500. Expectations were high. Even with everything going on, analysts were expecting a loss of $1.40 per share. That was not long ago, predicting that now that they'd be somewhere close to break even for the quarter. But most were still expecting a loss on a GAAP basis, and then Tesla turned in $2.18 of positive earnings, 50 cents of profit per share on a GAAP basis. They blew it away. That's it. It sounded crazy when one firm went out on a limb earlier this year and put that $7,000 a share price target, the prediction where they'd be in the next 5 years. Does that still sound crazy? Is this hype? Is it momentum? Is it like Bank of America is saying, and then they should be an $800 stock? Let us know what you think in the comments. Today on Dumb Money Live, we're talking all about Tesla. This is Dumb Money Live with Chris Camillo, Dave Hansen, and Jordan McLean, streaming live on YouTube. We are Dumb Money. Hey there, Dave here along with Chris and Jordan. Welcome to a very special edition of Dumb Money Live. It's the Tesla earnings edition. Chris coming to us from his vacation there in Rosemary Beach. Makes me want to venture out of the house. I was just invited to stay in your carriage house. Your wife just came up and talked into your microphone and said that we should totally be there.
Oh boy, yes. And I before I forget, I must. I promised to give my son credit for lending me his Fortnite headphones today, so I could actually hear you, unlike Monday.
Awesome.
That's my son Owen.
You look kind of like a Twitch. You've evolved from YouTuber to Twitcher at this point.
It sounds great. I love it. I might do this all the time now.
You look like a real gamer.
But listen, Dave, this is a serious episode. Let's. Here's the thing. We joke about Tesla, right? We joke about it all the time. Can it be a $7,000 stock? I always to say, hey, I'm not even sure if I believe in this thing, but I'm in it because I'm not going to fight Tesla, and I'm just going to ride this train with all the crazy Tesla boys like Jordan, right? And I'm just going to ride it, whether I believe in it or not. But here's the thing. I feel like I've never really given Tesla a fair shake. I've never really spent the time to deep research the bull case on Tesla to see if there was a legitimate bull case, if $7,000 or something way bigger than that. I mean, actually, that ARK Invest, Catherine Wood call this last year was actually $15,000 as a bull case. $7,000 was a base case for them.
Yeah, that's their base case, and 15 was their absolute bear case. So.
Yeah, and listen, I feel stupid. Listen, I've been following Tesla since the IPO, right? But I've never really consciously really dug deep to really vet whether there was something there that could legitimately be, a $7,000 to $10,000 share company, which would kind of put them in the multi-$100 billion value. Well, they're already in the right? But basically the multi-$100 billion valuation range, right? Yeah. Can they be a $1 trillion company someday? Can Tesla be a $1 trillion company? And I did the work. This week for this episode because I felt like they deserved it. And I'm really looking forward to this episode. But can we tease the next episode? Because I think it's really important. On Monday,
no, absolutely,
we are going to talk. This is a big subject. And if you are thinking about stimulus, or if you're not thinking about stimulus money, 2.0 or 4.0, what is it right now?
I think they were actually working on their fourth, but to me, this is like the first time that something ended and we're now having to replace it with something else. So to me, I'm calling it Stimulus 2.0.
Yes. So that episode is Monday, and it's an exceptionally important episode for investors, and it's something that you don't want to miss. So if you haven't subscribed to Dumb Money, you need to subscribe and also hit that bell so that you get notified of that episode Monday, or if we do it early or do it late, because I think that's a really important episode for investors. People have been asking about it. We didn't want to rush it out. We want to have enough time to really fully understand the repercussions of the stimulus package. I think there's enough data on the table now to where we understand what it's going to look like and how it's going to play out. And that's a big episode on Monday. But today's episode, Tesla. Tesla. You guys do your homework. Did you read that earnings report? I hope you guys read that earnings report.
I read the earnings report. I listened to the call. Here's the teaser for the Stimulus 2.0 stock picks. That's gonna be a great episode. Listened to the call. Watched a really cool YouTube channel that had put together like questions and slides and everything. And read the transcript, and I kind of actually picked out different things from reading it than I did from listening to it. So I think it was actually important to do both in this case. And
you're ahead of me, Dave, because that's the gold standard is listening to the call, not just reading the transcript. I read. Well,
you're on vacation though. You have a pass.
And let's explain to our viewers why you have to listen to the calls too, if it's the gold standard, because it's about tone. It's about reading between the lines. It's about hesitation. There's no way to fully grasp and interpret, the vibe of an earnings call without really listening to it. Okay, and so if you really want to dig in deep, you must listen to these earnings calls.
Well, and before we even started this episode, when we were just talking about this, you were joking that you knew that they were going to be profitable. Whatever it took, Elon was going to cook the books or push the numbers, but they didn't have to do that. If you look actually at what they did, they were profitable with free cash flow. They don't seem to have pulled any of the one-time levers to get to that profitability. Now, they did have some acceleration.
I thought the lever that they did was the federal tax credits.
Yeah, but that's going to be a sustainable thing because they're the ones that are going to continue getting these.
That's not sustainable at all. Not in America. Those run out after a while, right?
They will run out.
Once they reach a certain level of production, it's gone.
Jordan, yes, until they come up with new ones. Right. If the Democrats win, especially, right?
Right. I think that's something that they need to bank on.
By the way, Dave,
that makes the car profitable. It's not profitable without it.
Now, and I want to get into that during this call, guys. We're digging deep in this call, okay? So in this episode, Dave, let's just dissect. Was he breathing as deeply? I heard all these people commenting about he was breathing into the phone. Like, was it creepy? Elon, was he doing that?
I didn't think it was creepy. I mean,
you know what?
I thought he sounded good.
I thought he was actually more calm than I was expecting him to be. Right? Didn't you think that way, Dave?
He was.
I was expecting him to fly off the handle at somebody asking questions, and that never happened.
You never know which Elon you're going to get, and I thought he was very much a professional runner of a company. I mean, I was very impressed with his performance yesterday.
Yep.
Let me just tell you something. I didn't listen to the call. I read the transcript, but I came away thinking the same exact thing. I have either listened to or read every Tesla earnings call transcript and call since the IPO, and have honestly been embarrassed for Elon almost every single time. I thought this was the most impressive performance in terms of what he said, how he illustrated his vision for the future of Tesla in the history of Tesla earnings calls. And that said, he still is terrible. And this is what makes me feel so good, because he is as bad as articulating some things as I am. Like, I have things in my head I want to say, and sometimes I just can't figure out how to get them out of my mouth without sounding like an imbecile. And he does the same thing, but he's Elon Musk. And I'm like, you know what? I don't feel as stupid anymore in terms of my communication style, because Elon's the same way, and people think he's pretty smart, although I think he's just kind of nutty. And I think he's really smart in some ways and not so smart in other ways, but that's totally fine.
Well, I feel like when you're listening to him, he is so smart that he's having to take his very complicated thoughts and then dumb them down to where an analyst on the other side of the phone can understand what he's talking about.
Yeah, and that's what I think was most impressive. He actually hit on some things in this earnings call that I think are so instrumental to, whatever this theoretical road to Tesla 7,000 or 15,000 is. And for the first time, I really had clarity on it. And I'm not going to say that we'll talk about, what's really interesting about ARK Invest and what they have done, and Catherine Wood over there, is she has a very similar kind of methodology to us only in terms of her scenario modeling, right? So she ran, for anyone that knows, she ran 10 scenarios for Tesla, and she weighted each scenario, including bankruptcy, and that's how she came up with her price target. And I was kind of doing the same thing with Tesla. I was essentially running scenarios in my head based on what I know they want to do. And honestly, listen, at the end of this episode, we could all agree we have to pick 7,000 or 1,000. Each of us is going to have to do at the end of let's not say it now. At the end of this episode, you have to pick one.
Yep.
And I feel really good about what I'm picking.
I think what he did a really good job of was kind of communicating that forward momentum from transitioning from this electric car company, their tech software company, but he really made the case for them being an energy company. He was talking about how the energy part of Tesla is going to be as big as the automotive thing, and the energy sector is a way bigger sector than the automotive sector, and batteries and solar are going to be enormous for them. That I was wondering, Chris, if you're regretting putting in the natural gas generator to your house when you should have just waited until the mega pack comes out at the end of sometime this year, where you have a battery that will run your house for 6 days.
Well, no, because I want to be able to run my house for 36 days. So it won't work for me today. But
no, you recharge your battery with the sun, so you would actually be able to keep going.
Oh, well, yeah, I don't have room for that many panels. I'm not going to do
Well, the other thing is, I mean, it's ridiculously expensive, whereas, Chris for, $25,000 or $30,000 could put in an LNG generator to do the power packs and to replace your roof towards solar. It gets pretty expensive. Right?
Yeah,
we're talking hundreds of thousands of dollars.
But
So
they are now touting their retrofit roof product as the lowest cost in the industry. Their electric price at like $1.49 after federal incentives as the low. I mean, they have a low price guarantee and a money back guarantee. They've like really tried to. They made me. I've been. I went from not really thinking Tesla was amazing to really being a Tesla fan to buying shirts because Elon was wearing them on Instagram. I am a Tesla fanboy now, and
you're a fanboy.
He did a good job. They're still not giving any full year guidance for 2020. He said difficult to predict the shutdowns and shifts in consumer sentiment over the year, but their goal of doing the 500,000 vehicle deliveries in 2020 is you're saying they're on target for that. They said it's become more difficult, but they're still going to do it. So I'm now wanting to buy a Tesla battery for my whole house. I want to put some panels on my roof. I was on their estimator at 1 a.m. last night, just seeing how much it would cost.
The roof panels look so janky. You can't do that to your house. It looks terrible.
No.
The only way to do it is if you actually get the real solar Tesla roof, which looks pretty nice.
So I also know that my particular roof line, I wouldn't put them on the front, but the back you cannot see from anywhere. Not even the alley. Not even the neighbor's house. There's enough flat roof or slanted roof that faces the sun that my house would totally be a candidate for a retrofit. And their website says they do like a digital image, like satellite photo of your house to plan where to put them, and they do the installation. They do all the stuff with the city. They work with the utility. You become your own power company.
They can even estimate how much power you're going to use by sun patterns and like where you've got trees and all this stuff. I think it's really cool. I just for me, our roof line is very prominent for the house, so I could never get away with putting these janky looking solar panels on the top of my roof.
But what about the back half? Yours are like this. So I have a front to back roof line, and you have the teepees.
Yeah, my roof is really steep, and so you see it from everywhere, and it would just I couldn't imagine doing
I feel this is random, but like I feel like Elon feels the way the rest of the world sees what he's trying to do, and there are like a bunch of weird Tesla fanboys and like maybe one or two analysts that understand it. Don't you feel, Jordan, it's kind of the same way that people looked at ticker tags? Like, we were doing ticker tags for years. We knew it was light years ahead of what anyone on Wall Street, how they could even process contextualized data. there were like a small handful of the smartest people we knew on Wall Street that truly understood us. Guys like Matt. And then there were the vast majority. It was just so over their head they couldn't even comprehend what we were doing.
Yeah,
and how
let's
frustrating that was for us. It's got to be frustrating for Elon, though. You know what I'm saying? Because I feel like it's a similar thing.
I don't agree. So I think, look, here's the problem, right? And it all boils down to economics on this one. In that I don't feel like still you're that efficient by, putting your plan in the hands of individual consumers. If you really want to change the world, and I agree with what he's saying about solar and wind being the best power generation. I agree that there needs to be some sort of battery buffer so that you can actually meet demand on time. Like, I think those things are. Most people agree with this. The problem is, do you do it on an industrial scale or do you do it house to house? Right? What's the best way to distribute this plan? Do you want battery packs in everybody's garage? Soaking up that extra energy and then distributing it, or do you want huge battery storage somewhere, off-site that you use to deliver and soak up this energy, right? And I'm more of the industrial scale. I think you get better cost efficiencies there. And so I don't necessarily agree that this is going to be a good place for Tesla to invest. I feel like they should be focusing on the cars. That's just me.
Okay, so let me just say this. Okay, I get what you're saying, but you're not thinking of the economic piece of it. What he is doing by throwing it to the consumer is saying that he wants to essentially crowdsource the economic financing of this, because if if he can get every individual person to put up $100K or $50K or whatever it is and do it on their own, he's literally talking about trillions of dollars of investment that he doesn't have to do any of it himself, right? So I think that I agree with you, Jordan, that it would be more it'd be more efficient to do it in scale at like industrial sites in each neighborhood or whatever it is, but you'd have to raise like $1 trillion, it'd be so insane, right? And then you also have to deal with all the bandwidth of building it all and like the ops of it all. Whereas if you put it in the consumer's hand, you can scale that out so quickly, theoretically, right? Because you could have
it really
1,000
depends on
different
the rollout team, because you can't just. You'd have to have so many people putting. It's not like I could just take one of these things, throw up on my wall, and plug it in. I mean, you need electricians to come out and hold the.
No, but Jordan, think about it this way: in 15 years from now, you could have 5,000 independent contracting companies around the country that have become proficient at doing this. Yeah. And they're all doing it the same way that Amazon outsources the delivery to like hundreds or thousands of different little delivery services for last mile delivery. Amazon is like, here's a roadmap of how to do it, but we'll actually help do, but you do it. Like, it's your company, right? Like, I think
that I've got with all this stuff is that people that, so like, let's say you go ahead and you pony up, you put all this stuff on your house. Some people can afford to pay for this stuff, but most people aren't going to be able to just pay for it, with their own funds. And so what ends up happening is that like a lien gets put on your house for the value of it, then you pay it off over time, the whole bit, and that's fine until you go and sell your house and you've got this extra weird lien that you've got to deal with. That's why I feel like the economics are a little bit tough.
But
you start going down the stream. I mean, you've got early adopters that are definitely going to do this. And I 100% agree that the brand recognition is awesome. But I think once you kind of move past some of those early adopters that have the dollar bills to just go ahead and invest in it, it gets a little bit more tough for the ROI situation for an individual household.
So I went through and priced this for my house, and yes, it would cost. They're saying $12,000 in solar panels and $10,000 in power walls, and that I could get the whole thing for $16,000, $12,000 after incentives. But you can also, they have a non-cash option of getting a loan. So for less than my current electric bill, I could finance all of this equipment and then over the next 25 years save money on my electric bill while also becoming non-reliant on the grid. Because in this neighborhood, in the summer when everyone has the air conditioning on, our power will go out at some point.
Yeah.
Chris just invested
no,
in his
I totally
backyard.
agree that you could finance it over the 25 years. All I'm saying is it makes the sale of a home a little bit more complicated because now you're selling something that you don't own.
Well,
True.
I mean, just like anything in your house, the refrigerator that you're leaving behind, or the range, those are all just.
No, you own those things, or at least they're all part of the same note. Now you've got a second note on property that's attached to your home that you're trying to sell. And so I've heard, and I could be totally wrong about this. If our commenters know more about it and they've actually gone through one of these transactions, they should let us know. But I've read that it gets a little bit more complicated when you're trying to sell your house, and there's this solar grid on top of your roof that you don't own. Like if you pay for it yourself and you've got it free and clear, no problem. But
wouldn't you just, as a part of your closing, I would think just as a part of your closing, you would close out the loan the same way you would when you're trading in a vehicle that you have a loan on, right? As a part of the transaction,
maybe that's the case. Like I said, that's where I'd like to know. But I've read specifically that people have problems doing it.
But so it really just needs to be cash flow positive, right? As long as it's cash flow positive in terms of if the note is like $200 a month, but it's saving you $250 a month on energy, I don't think it's an issue. But if it's cash flow negative, then you get into it. Like, let's say energy costs got really cheap to where it was like your note was more than what it's saving you in energy. Jordan, that becomes a big issue. I agree.
Yeah, well, that's part of the issue, right? And I think that's the problem. Is that look, I don't think that for most people that they're saving more than they're spending on these things. They're doing them because they're green or whatever. At least in some of the previous iterations where they're not as efficient. Hopefully Tesla's working through that and they're going to make these things more efficient, better photovoltaic cells.
They are now.
I think they have, and the product roadmap for what they're coming out with this like Gigapower thing that's in your garage that to me, that is the future, and I would like to have that. And instead of having something that is a motor running on the side of my house like Chris just installed, I would rather have a battery that is storing up some power. You can even if you don't have the panels, you can charge up the battery when the energy cost is low, and then when energy price, like I'm on a plan through this company that basically sells me energy at the wholesale rate and charges me a monthly service fee. So I could basically arbitrage that and charge my battery when prices are low, and then when prices are high, switch to my battery power. And the software that Tesla is coming out with or has now automates that for you.
Dave, it's really important because again, you got to remember Tesla, you got to think about the future. They're thinking about having a million cars, tens of millions of cars on the road that need energy too. And these batteries would power your Teslas as well, right? Would power the car.
You would charge your battery off of the grid or your solar power from the battery in your garage to charge up your car. Which I think one of the other interesting things he talked about was the nickel mining and the nickel shortage out there.
We're going to talk about all this.
So much to talk about today.
So here's the thing. I think let's just talk about Brent. I actually did a lot of research on battery power when we were looking at buying the island in the Caribbean a month ago. Right, we're going to buy this island. It was it looks like the deal is not going to go through for various reasons, but it was a $11 million island in the Bahamas we're going to buy. I think one of the most beautiful islands I've ever seen. And we did a lot of work on infrastructure, energy generation, and I did a lot of work on solar. At the time, I just remember thinking, man, I wish I could just get a whole Tesla enclosed system here because the brand power of Tesla is just so great. And I don't think that's what people understand. I could envision in 15 years when the whole world is racing to do this stuff, like, are you choosing brand B or C or D, or are you going with the Tesla full on everything? And like everyone, it's like Apple, right? Yeah, it's like people are just gonna be like, no, I don't know much about this. I'm intimidated by this space. I don't know if I trust these brands. I'm just going to go with the Tesla because it's like having, what's their fridges that all the nice houses have in them? It's like
Sub-Zero.
It's like having a Sub-Zero fridge in your house. Like if you're going to invest $100,000 in an energy system for your house that has solar panels and it has power transfer and it has batteries and it's like connected to a grid platform, right? And like you're part of the whole plant. Like you're going to want to be with the Apple ecosystem, which is going to be Tesla, right?
Yes.
And
absolutely.
So I think there's massive brand power that probably isn't getting realized today because this stuff doesn't exist today. In 20 years, the brand power of Tesla is going to have so much value in terms of its ability to capture consumers. I think that's something that people aren't factoring in today. I agree. The energy piece is huge. It's as big as or bigger than the car piece, maybe substantially bigger eventually than the car piece when you think about all the ways it could impact your life, right? And
Yes.
just every house in the world potentially, right? Every business in the world doing this at some point, right?
I guess, and I've got my house so efficient on power that like the cost benefit just would never really be there.
I think, Jordan, it's less about cost benefit because
I think it's all about cost benefit, right? I mean, at the end of the day,
not today, not in 25 years.
I think, look, I mean, at a certain point, you got to pay for the thing.
Jordan, I agree with you. I'm not talking about today. I'm talking about in 20 years. It's not just about cost. It's about doing the right. I mean, if you think about how the young generation thinks, the Gen Zers, like they just want to feel good about their life and what they're doing in their world. And like that being able to buy a house that is fully off of fossil fuels is something that if they could do it for even slightly more cost than what it would cost to do it with fossil fuels in 20 years, I could see people spending more money than it's just they think differently. They think differently than us, right?
My point is that you don't need to buy a house that's off fossil fuels if you change the entire electric grid, and then everything is off fossil fuels, right? And so I feel like this is an industrial problem. You don't want to have all these failure points with all these crazy, photovoltaic cells and all this junk on your house. You want that to be in an industrial complex where there are people monitoring it and making sure that it's efficient.
But is this stuff like we have right now? We have massive air conditioning units on every house in the world that are crazy. We have so much complex stuff in homes, right? I think as this stuff becomes more uniform over the next 20 years, the concept of having a battery pack at your house isn't going to seem so complex, right? It's not going to be that complex. It's going to be like, hey, there's literally hundreds of millions of these things. They're so well maintained. There's the way they work is so easy, and it's so nice being in control of that and actually being able to make money off it. People can be like, hey, I would rather I want to do it because I think it's profitable, right? It's profitable.
Yeah, it's just, houses are already so expensive, right? And so do you want more capital investment in your house? Or do you want to invest in companies that are going to put that capital investment into infrastructure, which I'd rather do the latter.
Yeah, that's fair.
I'd rather the houses be more liquid to where you can get it in and out and really not worry about. So like, let's say you need to move, right? And then now you bought this crazy expensive house. Are you going to be able to find this one? And so, or do you say, you know what, we're going to do this to the entire grid?
Yeah, but you've done a lot of homework and gotten your energy cost under control. I think that to the general consumer who, when you have to shop around for electric rates and you can have your bill go from $400 a month to $100 a month just by finding the right plan and the right service, it's all so complicated and confusing that if you could just invest in some equipment, whether you buy it or get a loan for it. And I think the problem I saw in the comments, people were saying that when you lease it, that's where the problem comes in. But if you just get a loan, that's where it's easy.
The lease, maybe not the loan. Maybe they fixed it with the loan, but the lease I think was the issue.
But I just think that doesn't that become a huge benefit when you're selling your house? When you now, I have a system that you basically don't pay anything for electric because we're just harnessing
like a
the
headline.
sun.
As a headline, you're like, yeah, that sounds great. But if you run into issues with it, or if the price that you're paying extra to get, that piece of equipment, if it doesn't actually end up saving money, it's a net negative. Then I think some of those are issues. And again, maybe they'll get worked out over time.
And what I still don't quite understand how exactly they're quoting this $1.49 per watt thing. To me, that's actually more than I pay some hours and way less than I pay some hours. Where are they getting that, and who are we paying that $1.49 to? Is that the cost of ownership? Is that what is that? That low price guarantee that they have?
Yeah.
I don't know, but Jordan, let me throw something else out there because, like, you keep talking about, doing this off-site. But like in a lot of areas in the world, where the hell are you going to get the room for that many solar panels off-site? Like, it actually is more efficient, I think, to put like in an urban area, or like you're not just where do you have miles and miles and miles of panels to do a city other than just putting on existing
delivery
rooftops,
problem,
right?
Yeah, you realize they've got transmission lines that carry like crazy voltage, right? So,
well, forget about transmission lines. I mean, sure, forget about the what's a more convenient place?
Like, you don't have to do anything. Like, the transmission lines are already there. You just have to.
But Jordan, you have to have square miles.
Have them anyways, right? In case there's.
Jordan,
not
you have to have.
Everybody puts in the Tesla battery packs. So you have to
Jordan,
have those transmission lines in place
forget about battery packs, Jordan. I'm talking about the actual panels. Where are you going to have miles and miles of square footage of panels in Manhattan or New York or Boston or Chicago or
Manhattan. You don't have to have them in Manhattan. You realize, okay, so if you took
you also don't have a lot of free roof
everybody
space
in the world. You take everybody in the world and you put them in a 4,000 square foot house. Like, each family, about 4 people, you put like a 4,000 square foot house in like a suburban type neighborhood. You know that they could all live in the state of Texas, and like, there is so much land. It's crazy, right? There are very dense centers, but we've got transmission lines that'll carry the power from where it's generated, which is outside of major metro areas, into the metro areas. I mean, this stuff already exists. I don't know there shouldn't be an issue with that part of it. That problem has been solved.
But you know what I'm more interested in? I don't even think I need solar panels. I just want the batteries to put cheap electricity in and use that cheap electricity when it's more expensive to have it delivered to my house. I think
that's a really good one.
Half the cost of the whole investment. I could get those batteries for less than Chris bought his generator for.
Yeah, now Texas is pretty unique with griddy. That doesn't exist around the entire country. And then I don't even know what happens in Europe, how they paid. But in most states, like, it's pretty much a set rate on what you pay, no matter what time of day it is.
Yeah.
But yeah, with griddy, it makes perfect sense to be able to say, look, once the rate goes above whatever, then we just start emptying out the batteries, and then once the rate drops below whatever, then we start filling up the batteries. I mean, I agree with you.
And in Texas, we had this whole push towards being able to choose your provider and all of this, which sounds great, but then the plans got so complicated, and the way they disclose it, and it's more complicated than like a cell phone plan or a cable plan, or it's out of control. And so I'm really happy with who I'm using now, because it is just, they're giving me the wholesale rate on a minute by minute basis.
Yeah. Yep.
But anyway,
so don't you have loss, Jordan, of energy and transport, or no?
Yeah, that's why. So that's a good point, and that's why. So most of the long distance runs of power lines are built with steel cables, which actually doesn't transmit electrons very well. And so instead of low voltage throwing a bunch of electrons through it, they actually they throw the voltage way up and then lower the current, and then you don't get quite as much loss. But yeah, you still get loss.
But that's my issue, Jordan, because you got to understand, real estate costs a tremendous amount of money. So like, there's not just open.
Yeah, I mean, in Manhattan it does, but you're talking about
in Dallas, even in Dallas it does.
But we're not putting huge solar arrays in Dallas. I don't know what you're talking about. You do it.
Where are you?
Somewhere you find So there are power generation plants. Like, if you look at where all the coal plants are right now, coal plants aren't in the heart of Manhattan or in the heart of Dallas. They're like in Sulphur Springs, Dallas, and stuff like that.
But Jordan, you need massive land for solar, though. So if you want to power the city of Dallas with solar, you don't need like a few acres. You'd need like tens of thousands of acres.
So you realize that we reroute electricity all across the country right now.
Yes.
It's not really an issue. It's not. I just don't. I get what you're saying, that there is loss and stuff like that, but I mean, I think those are minimal compared to.
Okay.
So yeah, I mean, put solar array. They don't put these wind farms in the middle of Dallas either. They put them out, in West Texas, and in places that get a lot of wind and aren't very, aren't very population dense.
So
they would do the same thing with the solar arrays.
Counterpoint from Martin in our comments. What you're not understanding is that the utilities have a monopoly. So in places where you can't choose your power and you just have to pay whatever it costs, you can now become your own power generator, and you can generate more than you need and sell it back to them.
Yeah, no. So here's what you got to account on at that point: is that every single person has to become a CFO and figure out what's the cost benefit analysis of this thing going down, and maybe people are going to do that.
Or you just go to Tesla's website where they have a nice little calculator.
Go after at an industrial scale, save everybody money.
This is a great debate, but we must move on because they announced so many things. We have to talk about the Gigafactory that they're opening outside of Austin.
Wait.
You want to talk about roof batteries again?
No, can we just get back to the car? Let's get back to basics. I do have a lot I want to talk about with Tesla to answer this question. Let's talk about the car, okay?
Yeah.
So
the biggest announcements there to me are their new 400-mile EPA certified Model S. Their move towards the real thing is the full self-driving, and they're saying that's going to be complete by the end of the year.
So before you get to self-driving, because that's the big subject today, I think that's the biggest driver, right? But before you get to that, when we just think about Tesla, the company, I don't think any of this short-term stuff matters literally at all. Like here he said, demand for the cars is great. I believe that demand's great. I don't even care about demand for the car, quite honestly. It's all about, if you want to talk about the car, I think you have to talk about manufacturing, right? And I think the one thing that I found really impressive is that they are thinking about manufacturing very different, it seems like, than other auto manufacturers or other manufacturers in general. They really are going all out trying to change the way cars are manufactured. And they're thinking of it long term, but none of this is going to happen over the next couple of years. But over the next couple decades, I think Tesla will likely be in a position, and I do believe this, to produce cars and batteries and everything else that goes with the electric car manufacturing significantly cheaper than anyone else, because they just have a totally different approach of how they look at manufacturing these vehicles, right? They're looking at how can we change the manufacturing process to be significantly different and less expensive for each component.
Every part of that manufacturing process, from the building of the factory and the price that they're spending per production capability of the factory, down to trying to make these cars affordable enough so that everybody in the world can afford one. Which
he actually made a comment during the call that I thought was really impressive, and that was that if somebody in engineering is like, hey, the way this part is designed is making it harder for us to put together the car, then they'll take that back, redesign the part, make it better to where it's easier to manufacture, which I thought was actually pretty interesting, and just the way that they think about these things.
Jordan, it's way bigger than that, because it's the fact that he's building a company where if you are in that role, you are motivated to actually raise your hand and say that and be applauded for that, where at any other company in the world, and this is a fact,
specifically in car companies.
Yeah.
If you raised your hand and said, I have a way to redesign this part at Ford, you're off the assembly line.
Shut up. Shut up, Billy. Are you kidding me, Billy? You are literally a guy on an assembly line. Shut up. Okay.
I agree. I love that comment that he made on the call.
I got more excited about. If I were going to work a job, I would want to go work at Tesla right now.
All right, guys, this is what I'm talking about, and this is why, if you're an investor watching our show today, you have to listen to these calls. You have to read these transcripts, because it's about the little things, right? And it's about, like, we invest for a living. This is all we do, and what we've seen at certain companies, like Amazon thinks that way, right? To a big extent. I did a tour of the Amazon fulfillment center in Dallas. Guys, you must do that at some point. And my mind was blown, because they are doing things at the Amazon distribution centers that is light years ahead of what any other distributorship does in the world, using robotics and AI. And it is just absolutely amazing, and Tesla is taking the same approach because
I absolutely am looking forward to doing that tour as soon as they're offering those again, because everything you've said about it is just mind-blowing, and I want to go see that.
But this is how a multi-trillion-dollar company comes together. It comes together with that type of thinking, and it's not just about getting that efficiency gain because people are motivated to do the right thing and to share knowledge, but it's about recruiting. And the one thing that I know you guys probably understood about this call was a recruiting call. Like
Yes.
every single thing he spoke about.
Yeah.
And by the way, talent. We're operators, right? We're at Dumb Money. Before we were investors, we were operators. We've been operating companies basically our entire lives. And as an operator, the one thing you understand is talent is everything. Okay, the people that work in your company, if you don't have amazing talent, you're done. You're dead in the water. And what Elon did on this call shows me that they are doing everything that needs to be done to ensure that over the next 20 years, the world's top talent, and I don't just mean in engineering, in sales, we're going to talk about this later, even insurance actuaries, okay, we'll talk about this. Like every piece of top talent, if you're 22 and talented, you're going to want to work for Tesla over the next 3 decades, okay? It's going to be one of those companies, and you don't even know it yet because they're just a car company right now. But in 2045, I think the same way that Google had the top talent at one point in time and Facebook did after that, right? I think Tesla's going to have a pretty big run of attracting all the world's top talent. That is something as an investor that I put a lot of weight into.
Yeah, absolutely. Yeah. And I thought it was fascinating that he says, we want revolutionary actuaries. This is a quote from Elon Musk. I would love to have some high energy actuaries, especially I have great respect for the actuarial profession. You guys are great at math. Please join Tesla. This was fantastic to hear from he didn't have to think about that, all the way down to the actuary level. This is why I am now all in on Tesla.
Yes. It
and they're hiring not just in California, but they've got their China factory, their Berlin, the Giga Berlin, Giga Austin. I might have to move to Austin and just do some kind of
Giga Berlin.
Should we talk
about what?
You want to talk about Berlin? Or are we jumping around too much? We're talking about cars.
Well, yeah, that's okay. No, we're talking about cars and manufacturing, so I think it's fine to talk about, the different gigafactories.
We should have like a bullet point timeline of what we're planning to talk about, so that we can stay focused ourselves. We all have ADD.
Well, but here's the thing. I think what's fascinating is each time he builds one of these, he's already writing off the whole initial Gigafactory in California like it's old school. Like it's not even 1.0. Like that Gigafactory was like what do you call it? Like 0.9. Like not 1.0, but 0.9.
That was his actuary business, his insurance business in California.
But he also referred to the Gigafactory as like he was like it's old school already. Like he's like Berlin was one thing. He goes China, the one he's doing in China is like revolutionary, and the one he's going to do in Austin, like forget it. It's going to be mind blowing. Like in terms of the innovation they're bringing and what they've learned and what they're going to do in Austin. I can't wait for that Austin Gigafactory to be built out. But was there something about Berlin specifically you had, Jordan?
Yeah, so I've been looking at some charts, reading some articles, and just trying to like figure out what's going on in Europe, because basically Europe is the largest EV, second largest EV market, probably most by growth. And so Tesla actually has a ton of competition in Europe and is currently sitting around 3 to 5% of all electric and plug-in hybrid vehicles sold in Europe. It has been dropping dramatically. And so two things, one with this new facility in Germany is that one, it should lower the cost. There won't be tariffs of cars coming in, so that's a good thing. The other is that with more supply, will they be able to create more demand? Like, what is the actual problem? And we know that Elon said that demand is not the problem; it's supply. Hopefully, he's right, because European market share for Tesla has been dropping a little bit. The other thing is that once you get rid of, I think like something like 40 out of the 90,000 cars that were built in Fremont the last quarter went to Europe. So now you're talking about you're having to increase the U.S. market size too, right? So they're talking. So instead of supplying 50,000 cars in a quarter to the United States, now you're basically doubling your supply to the United States once you get this Germany plant up and running. And so, just things to look at, right? I mean, it is really is the demand going to soak that fresh supply up? And I don't know the answer to that.
So I think when it comes to that, it's interesting his thoughts on like vertical integration of supply chain, and the way he's basically just rethinking the way everything works. Instead of having parts being shipped around the world, just changing the way they're manufacturing the vehicle to make it more manufacturable, changing the vehicle itself to make it easier to make, changing the factory, the whole process from sourcing materials to shipping one out the door. They're rethinking everything. And that's what makes them not just a car company. They're handling automotive the way a tech company would. And that's amazing.
Well, by the way,
hold on. I just want to make one point. So somebody said that the reason for this was that they shipped fewer cars this quarter, which is definitely true. But their numbers have been declining in Europe over the past several quarters. It's not just this quarter.
So here's the thing, guys. And by the way, insurance is a big part of that. What I was blown away by was the fact that how he's going about building this insurance company, which I think can be the largest automotive insurance company ever at some point, because they're like, okay, if most of the claims are coming in on little fender benders, right, and you're having to spend like $5,000, $10,000, sometimes $15,000 to fix a fender because of the way that automotive repair shops work and the way that the cars are built. Well, how can we redesign the fenders, right, so that when someone has a fender bender, the cost is exponentially lower to get it fixed? Well, like car companies don't give a damn about that, because why would they? But if you're also the insurance company, all of a sudden, right?
Yeah, you have a motivation to improve the product.
That's right. So what happens when Tesla basically manufactures cars that are able to be insured at 30% of what a normal car insurance would be, because they've fixed how cheaply it is to insure that car, right? And all of a sudden then you kind of are the cost to buy a Tesla is significantly lower than another car, not because of the car price itself, but because the insurance savings. Like, that's mind blowing.
Yeah, and that's where they'll have like a total TCO type plan out in the future. And it's not just about, oh, you're paying $60,000 for the car or whatever it'll be. This is how much it costs to run the car a month or whatever it is, and they'll be able to make a better case for their customers, I think. I think
you won't actually have to even own the car. You can have use of someone else's car and self-driving and the taxis, and like there's so many things that make a Tesla vehicle not the typical car that you think you have to have sitting in your driveway. I don't want to have a garage anymore. I would love to have a house that didn't have that storage, that I had off-site and my car came and picked me up when I was ready for it and took me somewhere and then parked itself somewhere else. That's the future.
Yeah. Okay, so let's talk about the future. If you're investing in Tesla right now, and I'm invested in Tesla, I don't think any of this really matters that much. I think it's important for them to have a healthy car company. I think what they're doing with manufacturing is a big piece of that. I think what they're doing with tech, with recruiting is and talent's a big piece of that. I think what they're doing with insurance is a big piece of that. But for me, and Jordan, you've already said it, I think the energy piece could be huge for Tesla, or there could be a better way to do it, like with commercialization of these panels.
Look, I'm not against it, by the way. A lot of people are saying that I'm against these things, and I am not. I think it's awesome. I just think, once you get, past a certain level of consumer, the ROI gets a lot harder to sell to somebody.
Well, I mean, Jordan, listen, you're throwing out some red flags that I think if you're going to be a smart investor and you think that's the future of Tesla, you better darn well be analyzing you better take a devil's advocate approach, So I think it's really important that you're bringing up these things. I don't know that you're right or wrong, Jordan. It's something that I'm going to look into more.
Yeah,
if I were going to put big bets on Tesla based on the energy component, I would want to look into that more. And I think our viewers should look into that further. But for me, the number one reason, and I'm just going to say it right now, I think that Tesla is more likely to be a $7,000 stock than a $1,000 stock. And for me, it's all about automation. It's all about, what does he call it? He calls it, and it's not he calls it, it's just a term for it. It's, sorry guys. What does he call a self-driving technology? It's like
full self-drive.
Full self-drive. Sorry, I lost my mind. Full self-drive, right? So full self-drive.
I think they even said FSD on the call once.
That's the term they keep talking about. And he said specifically he is very confident that functionality will be complete by the end of the year. He is using it himself to get to work. And he says that people are going to be amazed by it because it's like it's like the technology that they're moving is like going from taking a few still images and trying to analyze them and figure out how to drive to taking a four-dimensional movie. And
okay,
I can't. Well,
here's the deal. We all know that Tesla has a very different approach. They're using the vision focused autonomy system versus LiDAR, right? So they have made a decision, right or wrong, years ago to take a really bold data-centric approach to autonomous self-driving cars, okay? The bottom line is it's either going to work or it's not going to work. Now, we could debate whether it happened. If it works, we can debate whether it works in 2 years or in 5 years or 7 years or 10 years, whatever it is, right? But the fact is that Tesla is in a unique position to move with that roadmap because of how many cars they have on the road collecting data, okay? Mm-hmm. So if that ends up truly being better than LiDAR, what Google and Waymo is working on, Waymo was valued at $100 billion, okay? Uber's valued at, let's say, $50 billion. I think Lyft is 25 or 30, something like that, right? So the three of those companies combined, I don't know, a couple $100 billion right there, and we're just getting started. You have to assume that at maturity, we're looking at $1 trillion to multi-trillion dollar space, potentially globally, okay? Potentially trillion to multi-trillion dollar space. So if you start talking about how can Tesla be a $500 billion company or even someday $1 trillion company, there's no doubt in my mind that's it. Like that is what you have to be looking at. Can they become the predominant global player in autonomous driving, to where, Dave, the vision that we would like to see come true, where we essentially nobody even owns a car anymore? Mm-hmm. Because I'm not a big believer in cars, okay? I don't think that car ownership is going to be a thing in 10 or 15 years. What we do is we study culture at Dumb Money, right? So we're all about detecting change as it's happening and trying to depict the present more so than trying to predict the future. And I think just understanding the present of how young people think, they simply don't have a big passion towards driving or towards automotive ownership. So
car culture is on the decline, and I think that it will always exist. You'll always be able to, go to a car museum and practice driving one around in some virtual modulated city, but I don't think that you're going to need to have real estate in your house or on your property where you park one of these things.
I don't necessarily agree with
95% of the time.
Yeah, I'd rather go along Chris's line of thinking in that technology that they're developing is going to be worth way more than the actual cars that they're building, and that's where, and I don't know how they do it, right? Because it's an integrated system, but if they were to be the self-driving technology that powers Ford and powers GM and powers Audi and all these different car companies, and they figure out how to license that technology, then yes, that's worth way more than just a car company.
I have two words for you. Tesla network. If the Tesla network ends up basically listen, nobody loves Uber, okay? Honestly, people don't even love Google and their Waymo. Like, nobody loves these brands. People love Apple, right? But like, people don't love those brands. People love Tesla, I think, and what they're trying to do. I think I can visually see the Tesla network becoming it's the fully connected network of all the cars that are driving us places, right? And yeah, guys, we go by our little parking lots and we could, we can put all of our Tesla charge stations in there and start renting them out and stuff like that. And nobody has a car. I mean, I'm not going to say no. Jordan drives a pickup truck. Okay, guys, we all know that he drives a pickup truck. That means that no, he's not like Dave. And I'm somewhere in the middle between Dave and Jordan. Okay, but like Jordan is going to have a harder time envisioning nobody owning cars anymore. Dave sees it clearly. I see it like in a fog, but it's happening at some point. I just don't know how far off it's going to happen. But this is happening. It's just a matter of when, not if. And that market is a SaaS market. Yes, they'll be licensing their stuff to Ford and to Porsche and all these other car brands, but they will also be the Uber, right, of the next 50 years. And I think they're going to get a cut of every ride that's taken. And as a car owner, I don't think Tesla wants to own the cars. I think they're going to have a program kind of like Amazon does for delivery drivers where, yeah, you could just buy a Tesla or buy 10 Teslas or buy 100 of them and put them on the grid, right? Put them on the grid, and they're making 6% annually.
Yeah, because it's much like they want people to buy the batteries and solar panels for their house, and that becomes the new way you get electricity. You can buy and finance and profit from owning a Tesla and put it into the Tesla network. They don't need to finance anything. They just let people participate in that, and that could be a moneymaker. You could actually have a fleet of Teslas driving around and your own special one that comes picks you up.
Dave, as we know, what is the largest cost driver of share drive? It's the human driving it, right? I mean, Absolutely. We all know that. It's the biggest problem. You take the human out of that picture, and by the way, you take the pollution out of that picture and the emissions out of that picture.
Hold on. Pollution still exists right now. It's just off-site. Now, the more you move towards solar, then that goes away. But then there is also a ton of pollution that goes into building these batteries, right? And so that's an issue.
Of course there is, but the ongoing pollution of energy, consumption, right? In terms of if it goes solar,
now going solar is great, but you're still having to produce the batteries, which is very, very bad for the environment to produce some of these batteries. When you take mining and production into account, a bunch of chemistry going on at massive scale. And so that's not really it. I feel like the best thing about the Tesla, let's say it's about even with the gasoline car as far as, being bad for the environment, which I think is, maybe the gas is maybe slightly worse. At least you're localizing that pollution somewhere away from most humans, right? In the inner city, you don't have all the smog and stuff where people are breathing.
And Jordan, there's the real pollution and there's perception of pollution. And the bottom line is, like we talk about this all the time. Like, the pollution that gets put out, building a battery is insane. It's crazy. But that we've known that for 15, 20 years and no one ever talks about it, right? It just is what it is. That's the way humans are. Like, they're going to take sides and this is going to be perceived as better. And people want to believe it's better, and it is better.
Los Angeles really only cares about Los Angeles, right? And so if they want to ban gas burning, it's because they don't want that smog in their environment. But if that smog gets made in China or like in the middle of a desert, they're like, who cares?
Or in the valley.
Yeah.
The
valley. So here's the thing, guys. The SaaS business is an 80% margin business with 70 to 80% or higher margin business. We all know that. That is why SaaS companies get the valuations that they get. At some point in the future, it could be 1 year or 5 years. If Tesla is successful making inroads into that market, the market is going to start, the Wall Street is going to start seriously looking at Tesla and valuing them based on SaaS multiples. And I do see how Tesla could at that point be a $7,000 to $15,000 stock. It's not hard to see at that point. A lot of work needs to be done. It's a leap of faith to some extent. I know it's really difficult for the human mind to envision a world where there's tens of millions of driverless cars roaming around, picking people up and dropping them off. But I will tell you one thing. I 100% see that world. Dave, I know you do as well. And I want to read something that I thought was a really fast. I don't know if you guys remember this quote from the conference call yesterday, but I thought it was really cool and funny. He said, hold on, let me read this here. He said, in general, I think I've been saying this AI drum for a decade. We should be concerned where AI is going. The people I see being the most wrong about AI are the ones who are very smart because they can't imagine a computer that could be way smarter than them. That's the flaw in the logic. They're just way dumber than they think they are. And I think what he's getting at with that is that, I've been, I read in a bunch of other articles about kind of the components that go into self-driving cars, autonomous driving. Each of those components, while controversial in terms of, when you put them together, is it safe? It's not a matter of is it safe. It's a matter of how much safer it is than a human, because each of those components are the same things that we have in our human mind, right? So like we are taking a risk on each of those functions, right? But it's just our mind doing it versus a machine doing it.
Now, I'm going to say something, and this is a point that's been brought up by many data scientists in the past, is the real problem with machine learning, and especially neural networks and things like that, is that, if you go to try to ensure some of these things, that it becomes a problem because you really can't explain what it's doing, right? Even why it's making the decisions that it's making. You can't really get in and dig into the logic. It's down deep in layers that are really kind of opaque to somebody learning and being able to write down a documentation to then be able to explain to somebody else how these things work. And so that's where I've got a small issue also with putting some of these things into the hands of these algorithms. And you see, some of these things happen already. I mean, it's not too common. I will say that people saying that I'm a bear of Tesla right now. I'm not really a bear. I'm not really a bull. I love the company. I think it's mildly overvalued right now. Not crazy, but just mildly. But
I think it's majorly undervalued.
Yeah, I disagree. So like when you've seen where like a semi is rolled over in the middle of a freeway and then a Tesla doesn't even notice it. It just barrels through, right?
That's old technology.
It doesn't happen that often, but it does happen, right? And so you don't really know when one of these algorithms is going to make a mistake because you don't know the algorithm.
That was old technology, and that was when humans were supposed to be still hands on wheel the whole time.
No, this is no. This is current stuff, and it's with their current technology that's supposed to be hands off while you're on the freeway. Is how I understand.
All right, yeah. But here's the thing. I agree with you that there are all kinds of outliers, right? There's outliers that this technology, we don't know what we don't know yet in terms of what the technology will miss in terms of outliers, and that's where it gets kind of scary. And because of that, I'm going to say that this is one of those examples to where the change that's about to happen is likely to take way longer to happen than anybody anticipates. I think autonomous driving is going to take way longer than anyone anticipates. But when it actually does happen, I think the change is going to be way more dramatic and way bigger and happen quickly at that point than anybody could ever imagine in a million years. So no, I don't think we're going to have autonomous driving in a few years, but I think in 8 or 9 or 10 years, I think we are going to have it. And I think when it happens, it's going to literally blow your mind because it's going to take over the world. It's going to be so big and overwhelming. And I think the company that is leading that space is going to be a multi-trillion-dollar company, probably Tesla, probably, not necessarily, but probably Tesla. And if you think, Jordan, it all depends on how you value the company, because if you value Tesla like any other company in the world, it is massively overvalued. But if you value it in the same way that we value Amazon and have valued Amazon for the past 10 years, 15 years, then it's massively undervalued.
This is another case. I also disagree with that. So at the point of $300 billion in market cap for both Apple and Amazon, they had somewhere in the neighborhood of 3 to 4 times as much earnings as Tesla has. So even by, crazy growth stock multiples, like they're still a little high.
Big difference, Jordan. Big difference. At those times, I don't think anybody saw the future of those companies didn't look nearly as big as the future of Tesla potentially looks right now with what's on the horizon. Okay, so it's like
that may be true, right? But I feel like there's also a bunch of they've also got a bunch of categories that aren't really showing that growth, right? And so I don't think they're really showing that growth in solar yet.
They're not. They're not showing the growth
yet.
anywhere, really. They're not showing it anywhere yet.
The possibility of that growth in the future. So I think of this, right around the time I started working at Yahoo was the same week, the same day, I think, that Yahoo was added to the S&P 500. And once Tesla has hit this milestone, I've been seeing a bunch of different reports comparing the two, where at the time, Yahoo was on this crazy, hockey stick, where it's going straight up. And then they were added to the S&P, and they kept going up for 6 months because there was no limit to the future of what this new internet thing could do, until the bubble burst and people's came back to reality, and the whole thing fell apart. So I had some of the worst priced options, employee stock options of all time, but after 10 years of that crash and getting more along the way, it came back to a more realistic, what can the future actually be? I think we're in the same kind of time frame right now where we don't really know how big self-driving can be. We don't know how big a rethinking of consumer consumption and delivery of electricity could be. Or changing from one kind of power to another kind of power. Like the kind of fundamental changes that this company is behind on multiple fronts, we don't know where it's going. And I think that this comment I saw a while back, if I can find it here, if they have the cheapest battery, it's a $7,000 stock. If they solve this full self-driving, it's a $7,000 stock. If they take over energy, it's a $7,000 stock. If they can scale without it, if any of these things can happen, this is the $7,000 stock. It's a big if. We could be in a, this could be a bubble. It could be people are projecting what they would like to have happen in the future, like I do. I would love to see all of these things happen in the future, and I think that this company is the one that can do it. But there are also people who would love to have seen Bitcoin be the thing that replaces all currency, and the giant run up there. You can kind of compare the two, and I would love for technology to move forward and to solve a bunch of the world's problems, but the reality, like Chris is saying, and I saw people questioning your 10-year outlook for self-driving, your point is you don't know the date. It is going to take longer than it's going to take longer than anyone is thinking, but it will happen in some time in our lifetime, and we will see it. And that could be 2 years.
The technology will be there, right? But it's how. It's not
when
just
is that technology
going to be there. It's like, when are we comfortable enough with the technology to then certify it to be able to do that?
Yeah, but I trust computers way more than all the crazy drivers on the road, right? And I think that the stats will show that the cars driving themselves do better than the humans driving the cars, and eventually there will be this tipping point where if you don't have self-driving, it's considered dangerous. The same way there was a time when people thought it was crazy to go around in these motorized vehicles when a horse-drawn coach was so much more safe and popular and effective, and all of these things, we're going to see a shift.
So can I just tell you guys something? I have really bad disc issues in my lower back. That's why I kind of move around this chair so much on the show. But I was nervous about driving to Florida from Texas. It's a big drive. I broke it out over 2 days. I still had to drive 6 hours each day. The last time I had driven even 3 hours, I wasn't able to walk for days. And I was going to switch off with Amy. We're going to stop every hour. She's stretching and all this stuff. But what I did is I was in her Infiniti, or QX8, and they have a really good cruise control option in that car, to where you could set your cruise control, and then you could also set kind of how far you want to be behind the car in front of you. Yeah. And I set that, and I got on the highway, and let me tell you something, guys. For 6 hours, I'm not sure I touched the gas pedal or the brake more than 2 or 3 times when I had to get off the road. Because I just set it at 80 miles an hour or 85, but then I just kind of got behind a car, and the whole ride, if the car stopped, and we got to a point where we were on a country road, it would literally on a country road, it would crawl to a stop, and then at the light, it would start going. And like I was like, and I was laying back in my seat, like really reclined. My back feels amazing, but what I took out of that is I really walked away thinking, my God, like this is happening. Like that was just cruise control, but a really advanced version of it. Okay.
Adrian's car does. She's got one of the Yukons, and hers has that. I love it.
It was basically flawless, and this is a few-year-old QX8 Infinity or whatever. But like, this is going to happen, and it's going to change the world of transportation. And I think the companies that are there, I think at this point, Tesla is the favorite, right, to be there. And it's all about scenario modeling and risk reward. So do I know Tesla's going to be a $7,000 stock? No. But if I think that there's a 50% chance of it getting there, which I do believe there's a 50% chance of Tesla dominating that category at some point in the next decade, that's a 50% chance of 5 times your money, right? So,
well, look, I mean, Tesla's already light years ahead of the Infinity and the GMC version, right? I mean, theirs is 10 times as good because it'll change lanes for you and all this stuff. They're on the way.
Yeah.
Sure.
Anyway, so I will confidently say, and again, I'll remind everybody watching this show that we're not financial advisors, so please don't do what we say. This is just about what we're doing, and so you can learn about how we think about what we're doing and be entertained by it.
Our personal analysis of what we're doing.
Yeah, because we don't know what your risk factors are, guys. So like we know what our risk factors are. We know what our risk tolerance is. We don't know what your risk tolerance is. So do not replicate our trades ever, guys. It's really important. I mean that. But I am confident for myself in saying that I believe there is a better likelihood of Tesla being at 7,000 than 1,000. And I have 300 shares of Tesla. I think there's a pretty good chance that, if Tesla comes down at all from here, I mean, I might increase my Tesla position a little bit. I'm not a lot, but I might increase after the homework I did this week on Tesla and that call yesterday, I feel better than I've felt about Tesla in a really long time. And I don't even care what the stock price is, because it's at 500 or 1,500. If we're talking about it going to 7,000 or 15,000 in the next decade, it kind of doesn't matter that much, right? From a decision standpoint.
No, I agree. And Tesla is my second largest holding now behind Amazon. I have 500 shares. I am up 99% since buying that. And I only recently, I didn't have Tesla when Jordan picked Tesla as his forever stock back on the other Dumb Money channel. And now
I made
Jordan's
fun of him.
like, I don't know. I know, we both did.
Guys, if you haven't seen that episode, you need to go to the regular Dumb Money channel on YouTube. It's just YouTube/Dumb Money, and watch our Forever Stock episode where I was so making fun of Jordan being a Tesla fanboy. He owned Tesla at the time, and I was like, "You're crazy!" It was what was it, Dave? Was it 500, 600? What was that?
And he said, "I'll never sell."
I'll never sell. Guess what he did? He sold it. Now he doesn't own Tesla, and now I own it. Bought it.
Let me say something. So I sold. You want to know why I sold? Because there's somebody who told me that the stock was overvalued. There was somebody.
Was it me?
No,
was it me?
Elon Musk told me that the stock was overvalued. So if you're trying to figure out what's the valuation that you should put on this thing, is that right now it's still above the point where Elon told us all, the whole public, everybody on Twitter, that the stock was overvalued. And
but he's mentally ill, Jordan. You don't listen to a mentally ill person.
Tesla, but I'm not going to buy it overvalued. It's just not going to happen. So if we get down a little bit, then I'm long Tesla, but I'm not going to buy it where the CEO tells me that it's overvalued.
He's a lunatic. You can't listen to that guy. Come on.
Right? If the ultimate insider tells you to sell, you sell.
Okay, so you're trading on that inside information from Elon's Twitter account.
Yeah, I mean, he's an insider, but he gave us.
But we talked about why he said that, and we think he said that to protect himself.
That was a tax-related tweet.
Yeah, I think it was a tax-related tweet.
We have a Dumb Money Live episode. I think it was Elon's face in the thumbnail.
Tesla stock action.
Have you looked at the market today, just in general, because things are not looking good for either of our portfolios?
Anything.
Hey, let me tell you something.
It's
I
falling
waited
apart.
to sell my Chipotle puts, and I ended up getting my money back out of them, Dave.
Oh, good work.
Oh, guess what, Jordan? Guess who bought Chipotle puts after reading your text yesterday?
Yeah.
I said, you know what? I can't remember the last time.
I got out even on them, but I went way out of the money. I should have just bought
Okay.
puts. But.
I was like, I can't remember the last time Jordan bought puts, so I'm going to buy these
I'll tell
things.
You what it was Wednesday when I bought Snap puts, and I actually made money off those.
But Jordan is doing a little experiment where he's just doing some more speculative options, small amount of speculative options, just to kind of get back into that options game.
Yeah,
can I just tell you guys?
Talking about that,
and I'm playing it.
Can I just tell you guys? You know what's doing awesome? My Ford, baby. You know, I bought 50. I know I bought another 1,500. I bought another 1,500 Ford call options at $650 on Friday when I sold my last batch for a 90 grand profit.
Yeah.
And these things are up now, huge. Like I sold 500 of them right before the show. So now I have 1,000 of these Ford 650 calls expiring tomorrow. I don't know what I'm going to do with them. I might re-up them for another week. But and by the way, guys, you see that ocean behind me? I'm about to jump out of here this YouTube episode and get in the ocean. But
Chris, do you make money on those Chipotle puts?
I'm dead even right now on them.
Yeah, I got out dead even.
Yeah, so I'm even. I don't know what I'll do. I'll probably sell them at some point today, obviously. But
all right, let's before you go jump in the ocean, let's just run through a few rapid fire Q&A from the chat.
Wait. Are you gotta say if you're in Tesla 7,000 or 1,000 first? Put it out there.
Can you guess? 7,000.
7,000. Jordan, I don't know. Jordan, are you 7,000 or 1,000?
I think it's gonna have a rocky road to 7,000. I'm gonna say it's gonna take a pit stop at 1 and then cruise straight up after that.
I like going against the grain. I like going against the dumb Ernie grain. All right,
it'll take a pit stop, but I still love Tesla. That's what people don't understand. I love it.
Chris, are you 7,000?
Oh, all the way, baby. I'm a fanboy as of today.
Sweet.
Kidding me?
I've convinced you. All right, so if we haven't addressed your question yet, go ahead and repeat it in the chat because it's too much scrolling. But I do want to get to a few. Dumb Money guys, do you believe there's a play in nickel mining companies? Elon said it was a bottleneck in battery production.
It is literally, when I read that in the transcript, I made a note, research nickel mining companies.
I did the exact same thing.
I've got the same note.
How many, did you find one yet?
No, I haven't had a chance.
I found one, but I don't know enough about it to really talk about it yet.
Yeah, most of them are foreign.
Yeah, this one's in Brazil called Vale.
Yep, that's the biggest
like
one.
That's my quick look. Have not bought it yet, but going to be looking into that. Oh, look at all these questions coming in. This is awesome. So we're gonna do these as quickly as we can, so that Chris can go
Beach.
ocean, whatever you're gonna do in the ocean, social distancing in the ocean.
Boogie board.
Let's see. Elon said the price is not... Okay, these are before people started reposting questions. Dave is so sleepy, he's forgetting to tell people to like the video. Have I not told you guys? I know I put the graphic up when someone was talking. We need you to like the button and hit the smash. Whatever.
Okay, what do you think about Vista Outdoors Spectrum brands for earnings? I still love Vista Outdoors. Haven't sold any yet. I'm in them for earnings. Spectrum brands, I'm looking into it deeper. I haven't made a final decision. I think I like them going to earnings as well, but I haven't made a final decision yet. Ackman SPAC. How about that SPAC? I might go with the Ackman SPAC. I think it could be fun.
Hearing Ackman describe what the SPAC process is compared to the IPO process totally made me rethink everything I thought about SPACs. I thought it was a sneaky way to get in. I'm all for SPACs now, and I particularly like his way of thinking and the fee structure or lack thereof for the managers.
It's
and
world now.
It's a better way of dealing.
Guys, someone asked about my Lemonade holding. I sold it. I haven't had time to research. I know about Lemonade. I've been following since they started. I love the company, but I don't fully know if it's the right time right now for Lemonade in terms of arbing any type of major information the market's not already aware of. And until I have time to research them, I sold them. So I no longer am in lemonade.
Do you want to talk about our big?
Here's one you can do. REMX. That's a rare earth metal ETF. I don't know if it's any good or not, but it's something that you can look into.
But it is one.
It is one.
REMX. Let me put
That's
that.
all I'm gonna say.
Amazon earnings next Thursday. All right, someone's asking a question. I have a feeling that our episode on Thursday is going to be an Amazon episode, don't you guys?
Yeah, think
on earnings. So wait till next week. We'll talk about. I think earnings usually after hours, so we'll probably have a pre-earnings episode where we'll actually get to kind of talk about our trade going into earnings if we have one at the time. So so subscribe not just for Monday's stimulus episode, but for next Thursday's Amazon episode. As you know, that is my forever. No, it's not my. It's all of our forever stocks. We weren't allowed to choose it because of that.
We couldn't.
But Amazon, we love it.
Question about are you still long gambling stocks? Another huge holding of ours is GAN. I know that you've pared back a little bit, Chris. Where are you now on GAN?
Yeah, I pared back from 80,000 shares of GAN to 30,000. So I'm at the top end of where I wanted to be long-term GAN. I wanted to be 10 to 30,000 shares. I could add to that position if I see things that are advantageous to them, but I think the market is starting to digest all the great opportunity in GAN, and that's why I pared back my position. I'll have more to say about GAN in the next few weeks. I have more homework to do on them, but
it's down today almost 4%. But I'm also I have 30,000 shares. I actually have a random 30,976 shares because when I was trying to buy 10,000 more, I do accidentally because
shares.
I was trying to buy more, but I couldn't get filled because the price kept going up.
That's a lot of shares for you and GAN.
It is. The rumors that Ackman SPACs could be Airbnb, that is purely a rumor, and legally he could not have had a conversation with Airbnb and also mention Airbnb as a potential, but he talked about that in the interview, and that was probably some of CNBC's best work when they interviewed him. I was really impressed with the questions they were giving him and his answers, and they kept grilling him on his statements about the world coming to an end. And I went back and watched his original interview, and he's right. He was not as pessimistic. He did have in a 20-minute interview or whatever, he had a very clip that kept getting played over and over again, but he was actually saying, I'm going long on stocks right now. I'm buying Chipotle. I'm buying all these things. But if we don't do something, then it's going to be terrible. And I thought that he... I've never really given much thought to Ackman in the past, but I was really impressed with his most recent appearance on CNBC. So
all right,
it's on YouTube.
Let me go against the grain on this one. I watched the initial one, the controversial one, live when it happened. Screw CNBC.
Yeah.
I don't care. I like Ackman. I got it. I understood every word he said when he said it. I actually felt the same exact way as him.
Yes.
My trades were very similar to Ackman's through that whole March and April period. Okay. He saw it early. Screw you, CNBC, because you didn't see jack. Okay. And you were just pissed off because you didn't see what was happening. Yeah. I think what Ackman said made total sense. Okay.
But they kept replaying the most dire portion of his sentiment instead of the whole interview. I think that this time CNBC, by grilling him, trying to clear up this confusion, gave him the opportunity to respond and say, it's all you. He said, CNBC, you guys did this. I gave you a 20-minute interview, and you picked 15 seconds to keep playing.
Yeah.
News organizations want the sensation.
So I'm not a CNBC fan. I'm an Ackman fan.
Someone said Jim Cramer watches Dumb Money. I think what they're really meaning is that one of his producers does, and they might, because we have no people in common. But did you see, Dave? Did you ever get those two? I mean, you got to put those. I never.
You gave me something that I needed to pull a graphic from our show.
Can you put it on the screen? Could you put that graphic on the screen? I think it's awesome, guys. You might remember when we did our
did you send
Great
this
Outdoors
to? Who'd you send
episode?
it to? Was it me and Jordan?
I texted it to you. Just to you, I think.
No, here it is.
Yeah. So we did a Great Outdoors episode, as you guys know, if you watched Dumb Money Live, I don't know, 6, 7, 8 weeks ago, I don't know, a month and a half ago. It was an awesome episode. If you haven't watched it, you got to watch our Great Outdoors. And Dave, you do the best thumbnails. You're just so talented. And so someone put on a Discord channel that Jim Cramer basically did his own Great Outdoors and did it like 2 days ago, like 5 weeks after we did ours. So
Jim Cramer's Great Outdoors that someone took a picture of. And if I can find, we definitely had an episode that was called The Great Outdoors.
Great Outdoors,
so we did it like 2 months in advance.
So I was talking to our buddy Chase out in LA, who's a big fan, and he, we invest with Chase for all biotech and pharma companies and all the medical companies. There's our Great Outdoors episode. And Chase's fiance's mother, so his future mother-in-law, was a big fan of Jim Cramer and his show, watching him for years, and she has completely switched over to Dumb Money now and says that she no longer can trust Cramer because he is so behind the curve, and everything that we talk about on Dumb Money, he talks about days to weeks later, or like a month later. So that was so cool to hear. Chase's mother-in-law, if you're watching, hello, and thank you for transitioning to Cramer to Dumb Money.
That's great.
Listen, I love what Jim Cramer has done for investing. He's gotten more people excited about investing, but that's the last 15 years. What are the next 15 years, right?
Yeah, no, we grew up watching Cramer, and his, he had an influence on you as an investor, and what you liked about him and what you didn't like. I
grew up watching the original Money Honey,
Maria Bartiromo
back in the late 80s.
The Money Honey.
My wife is shaking her head at me right now.
You can't even talk about that now.
Anyway.
I think that's it. I think you're done. I think we're all done.
That's it.
We have to remind you one last time. Smash the like button. I don't know if I said it enough, but if I didn't, we have 219 smashes of the like button as of right now. Before we sign off, I'm going to give you a final count, but while we're doing that, I'm going to remind you, we have a podcast. If you want to hear what we're doing and you aren't around, you can do that. I have my Occupy Mars shirt, which is not available in our store, but I found it on Elon's Instagram, so you can buy that from him. Although we should do more merch, because we have all these sayings that people in our comments are like, oh, that should be a shirt. Whatever random quotes we say should be a shirt. So more merch. dumbmoney.tv/merch is where you can go to buy stuff with our logo on it, including.
But Dave, where do they send their merch recommendation? Do they go to the Discord channel under our merch channel?
I think go ahead and post your ideas somewhere in Discord. I don't know. Maybe the merch channel would be a good place to do it.
I think.
Thank you, Mr. Smith, for subscribing. I think I have it figured out where I can put, when people buy a shirt, if you buy it during the show, it'll say your name, that you bought a shirt or whatever.
Nice.
Maybe. Who knows if that works. I'm getting a reminder here in the comments that I need to plug my other channel. Hey there, Dave here. New video dropped yesterday. It was awesome. Darwin, thanks for subscribing. I feel like we're a Twitch show now. But yes, hey there, Dave here. It's something that I talked about on this channel a long time ago and finally got around to making the video. It is all about trailing stop orders and how I'm using it to protect myself in the event the market were to have another crash. And it's one of the most highly edited videos on finance you'll see on YouTube. So
that's awesome.
Enjoy that. Chris, you haven't seen it yet. You need to. Cruiser's Gonna Cruise. I saw Pedro, one of our regular followers. He has a YouTube channel. He gave us a shout out wearing our shirt at the end of his video that he dropped yesterday. So Pedro, thank you. I'm sure I haven't seen him in the comments. He's probably too busy answering his own comments right now. What do we have? Oh, we have merch ideas as a channel, Leon's saying. Oh, do we need to talk about we have so many things going on. We have this crypto talks thing going on that Leon's heading up, and I'm not sure exactly what our involvement is other than we don't know much about crypto, so we're going to be asking some questions and learning.
Yeah, listen, there's no doubt that the social R methodology works for crypto. We just don't use it for crypto. And Leon has been trying to pull me into crypto for 5 years. And, he's the biggest crypto guy we know, and he really understands his stuff. He spends a tremendous amount of time in the crypto community and sharing his knowledge. and really trying to add to the community. And he asked us to do this, and I can't wait for it. I wouldn't do it for anyone else, but for Leon, we're going to do our first crypto event, and maybe we learn a little bit, and we talk about how we can kind of evolve our type of thinking for the crypto space. Even if we don't ultimately do it, maybe other people that have an interest in crypto can leverage social art thinking for crypto. I think hopefully that's what it's about.
It's an event that you can actually attend virtually. It's an online event. We have a redirect from dumbmoney.tv/crypto talk. dumbmoney.tv/crypto talk. Oh, look, Pedro is on. So I watched his video yesterday. At the very, very end, you'll see a shout out to us. Thank you for that. Let's see, who else do we have? God, we have so many comments that just rolled in here. Protect myself in the event I go on vacation from a 30% drop. Yes, evil genius. That is, if I had done that, do you know how I would have not lost that $1 million? Which I didn't lose it because I, watched the video before that, which it was down, but I'm now up 3 times that. So we're all good there. That's what else? Like button count, we're now at 263. So thank you everybody during the live show who watched it. If you're watching the replay and you made it all the way to the end, let us know in the comments because, like I say, you're my favorites. Subscribe, hit the bells, podcast, Twitter, Instagram. Find us on those channels as well. Discord server, I saw that URL on the screen. Can I put that up? Where is it? Oh, there's so many things to talk about. dumbmoney.tv/Discord. If you aren't a part of that community, it is where all the stuff happens. What else?
That's it. I got to get in that water, Dave. I got to get out of here.
We've done enough talking.
Join us, guys, at the beach.
Thank you guys so much for watching. We are Dumb Money. We will see you on Monday with an awesome episode all about what to expect for the 2.0 version of the stimulus. Until then, we're Dumb Money. Have a good weekend.